Hello and welcome to this Forex Preview at xm.com. I'm Maria Bachardis, and joining me is Senior Investment Analyst Marios Hadjikyriacos. We'll be discussing upcoming events and data in the U.S., as well as the outlook for the dollar amid the current geopolitical crisis. So Marios, given the ongoing war in Ukraine, what action do investors anticipate the Fed making? And what are we likely to get from the U.S. employment report out on Friday?
Well, hello, Maria. That's a complicated question, but let's try to decipher it. So far, what we've seen is that the geopolitical crisis is a really, let's say, positive event for the US dollar. So the US dollar, obviously, is the world's reserve currency. And it's not just these safe haven flows. The dollar is also benefiting from a weaker euro, right? Because think about the geography of things. The European economy is much more exposed to the crisis in Ukraine. So the European economy will probably get hit both by surging energy prices. Remember that Europe imports a lot of energy from Russia, but the European banking sector will also be indirectly hit by the sanctions that have been imposed on Russian banks lately, because there's a lot of exposure between European and Russian banks. Now, America has neither problem. American banks don't do a lot of business with Russian banks, and America is also energy independent. In fact, it's even a net exporter of energy in recent years. So the impact is going to be much smaller for the American economy compared to the European one. And investors, of course, there will still be some problems for America. One of them is higher inflation because of higher energy prices. But investors are saying that's not going to force the Fed into tightening more aggressively. So what we've seen in recent days is, yes, oil prices have gone higher, but investors have also dialed back their bets for Fed tightening. So right now, the market is pricing in 5 rate increases for this year, whereas a couple of weeks ago, we were at 6.5 rate increases priced in. So we've priced out quite a lot of it, and the thinking seems to be that the Fed will not dare to tighten aggressively in the middle of such geopolitical uncertainty. Even if that means a period of higher inflation. Now, as far as this week is concerned, we're expecting a pretty solid employment report. So non-farm payrolls forecast at 438,000, more or less the same as the previous month. The unemployment rate is expected to drop a little bit further. Wage growth is expected to fire up a little bit. So all in all, it looks like a solid employment report, and the indicators we've gotten so far from the labor market, they support the case for the report to be solid.
Do you think the dollar rally will continue? And what should traders look out for?
Well, I think that right now, geopolitics are the only thing that matters. Geopolitics are in the driver's seat, and economics is playing a secondary role. So we saw the dollar actually break higher earlier today. Euro dollar broke lower, specifically for the reasons we're discussing. It's not just the dollar benefiting, it's also the euro weakening. And considering that these factors, the geopolitical uncertainty, the mood turning against the euro, I would argue that we might see the dollar continue to gain for now, at least until we see a ceasefire in Ukraine.
Marios, thanks so much. And thanks for joining us at xm.com.